Hey everyone, it's Julie with Catalyst Realty Collaborative. I'm excited to share with you today where the real estate market stands as we are in this beautiful, gorgeous month of October 2025. This time of year is always really a great moment to just kind of take a step back and look at what the market has done in the inventory world, what stayed steady, what's changed, and what it means if you're thinking about buying or selling. So in this update, we're going to take a closer look at a few key things. First, we'll check in on the median sales prices in the counties I work, Chittenden, Franklin, and Washington counties. We're going to talk about how much homes have appreciated over the past year. And then next, we're going to look at days on market. Are homes selling faster or slower right now? And after that, we'll talk about inventory, meaning how many months of supply are available based on the current demand. And then finally, we'll wrap up with mortgage rates, what they've looked like over the last year and how they compare to last year and whether they will, trend down or not. So by the end of the video, you'll kind of have a clear picture of where Vermont market stands, at least in my area, heading into the final stretch of 2025 and what that could mean for you and your real estate goals. Okay, so we're going to start with median sales price and where we're sitting so far this year. Across Chittenden County, we've seen about a 3.4% increase in market appreciation year to date. And that tells us the market here has really started to level out in this county compared to the rapid jumps you can see on this chart that we saw in previous years. It's steady but healthy, kind of a sign of a more balanced market overall. Moving to Washington County, appreciation came in a bit higher, around 6%. That's actually slightly stronger than last year, but nowhere near kind of the double-digit growth we were seeing back in 21 and 22. Again, another sign things are more stabilizing. And then interestingly, Franklin County continues to lead the way. It's had the most consistent growth year over year than all of the three counties, with appreciation holding at about 8.5%. That steady rise really highlights how demand in Franklin County has remained strong, especially for buyers looking for more space and affordability just outside Chittenden County. Next, let's take a look at days on market, which gives us a sense of how quickly homes are selling across each county. Starting in Washington County, homes are spending about an average of 24 days on the market. That's a bit higher than last month, but still not the highest we've seen for the year. So while things have slowed, just slightly, it's not signaling a major shift. Over in Franklin County, we're seeing one of the lower peaks for the year with homes averaging 14 days on the market, so just about 2 weeks from list to contract. That's still a very active pace, especially for this time of year. And then Chittenden County continues to kind of show the strongest demand overall, even though it's up slightly from the last couple of months. Homes are still selling in about 12 days on average. Again, really highlighting how desirable this area remains for buyers. All right, so now we're going to talk about supply of inventory, or in other words, how many months of homes are available based on the current demand. So in Chittenden County, we are sitting at about 2.6 months of supply. What's interesting here is that most of the increase has happened over the past year, meaning we're finally seeing more homes actually come to the market, and those homes are taking a bit longer to sell. Altogether, that shows that we have a little more breathing room, but it is important to remember that a balanced market is considered to be around 6 months of supply. So even with this growth, we are still sitting below that threshold, especially in the most desirable towns and price ranges where competition remains strong. Then we'll look at Franklin County here. Inventory has shifted quite a bit throughout the year. Earlier in 2025, we saw it climb closer to 4 months of supply, but it's now settled back down around 2.1 months, which still points to a seller's market in most areas. And then finally in Washington County, we're seeing the highest inventory levels of the year so far, around 3.6 months of supply. That's giving buyers a bit more opportunity to explore options, maybe not have to write the offer that night, but overall we're still in a market. And finally, let's take a look at mortgage rates and how they've been trending over the last few years. So you can see on the graph that rates peaked above 7.5% back in the fall of 2023 and early 2024, which created some real affordability challenges for buyers. Since then, rates have slowly but steadily come down, dipping below 7% several times throughout the year. And if you look closely at the last few months, you'll notice a consistent downward trend, which is really giving people a lot of hope that we might see rates continue to settle closer to 6% or maybe even below. That kind of shift can really make a big difference. For every 0.5 percentage drop in interest rates, a buyer's borrowing power typically increases by about or over $10,000 or more. So as rates ease down, more buyers re-enter the market and affordability starts to open up again, which could create a really positive effect heading into our next year of 2026. All right, that's all I have for you guys today. Take care.